Elevation. Cool and Dre. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved them.
What's going on, YouTube? Welcome back to Goofy Investing, where we talk about investing in the stock market. Welcome to the underground, very small channel. I put out quite a few videos here on Navitas here. Probably maybe 3 or 4 within the month or whatever. So this will be the last video for this month, which I'll make a video on Navitas because I got to move on to other videos. But I want to talk about some more of the intricacies of risk versus reward on this investment, profitability aspects, and different fundamentals surrounding this equity. Okay, so this equity is dropping dramatically due to price action, and that's another reason why I put this video on out here. As you can see, I have bought, just yesterday, I just bought a couple grand of Navitas. If you're part of my Patreon, you should get buy and sell alerts right there, real time. As you go on through life, it'll pop up in your email and your Patreon notification or so forth. So be sure to check that out. But Navitas, all right, this is a microchip semiconductor company. I see them as having the intellectual property and design patents for the future of the longer lasting light bulb of microchips. Okay, so what I mean by that is their chips are 3 times faster, weigh half as much as the regular microchip, probably about half the size of a regular microchip, and consume less than half the energy of a microchip. Okay, these are the microchips of the future, the cutting edge technology. Now, NVIDIA has the mass scale microchip technology of today. Okay, but Navitas is in the future, and we invest in the future. Okay, so what does it take to be an investor of Navitas? What kind of gains can you expect? What type of risks are you taking with this equity, like I am? All right, I hope nobody is following my trade just because I'm doing it. All right, be sure to do your own research. Okay, now, with that being said, let's pull up my Navitas buy orders. Okay, so here's my complete buy order history of Navitas. As you can see, I started investing in this company in January. Okay, prior to pulling the trigger on the initial tranche of investment, which is only a couple $100, as you see down here. I've been following this company about a year prior to making the initial investment. That's how much research, patience, and discipline goes into this type of stuff that I'm doing. All right, and notice I didn't buy heavy. All right, I got in, see a little dramatic drop, bought another 800, 1,000 here, 1,000 there. And then when we started dropping in price action through these buy and sells, or not in the sells, all these buy orders, we're going in, when the price action drops $1 or significantly, I start coming in heavier and heavier. All right. Leading all the way up to November, we're almost at the point where I'm at the 10,000 invested capital. All right. So typically, when I get to the 10,000 initial investment of capital, I take a deep breath, I reassess, I reanalyze, and I meditate on how much do I want to put in this equity, how much am I taking, how much am I willing to take risk, and so forth. But in order to think about all of these things and come up with a conclusion, you got to understand the risks. Okay, so what are some risks that I see with Navitas? What would destroy my investment? what would force me to buy, or what would force me to sell the whole investment right on a click of a button real fast? Okay, well, I'll tell you what would. If China invades Taiwan, I will sell my whole position immediately. Okay, their manufacturing, a lot of the manufacturing is done in Taiwan. And the infrastructure of the fundamentals of Navitas's company. We'll talk about that. About over 90% of the materials used for this GaN material that are put into these chips, a lot of the materials are in China. Okay, so this equity has a lot of exposure to China. With that being said, we just had elections and looks like the Republicans are taking over, if you will. So their intent is to be tough on China, especially in the microchip processing arena, the semiconductor arena. So that's why you're seeing massive downswings on these semiconductor industries due to fear of tariffs, import and export tariff taxes that would hit business model profitabilities, risk in the regard of provoking China to start a war or what have you. These are things to take under consideration. Okay, is a lot of this fear over dramatic to where the downside is oversold? I assess it is, but it's still a legitimate risk, and it's a risk that I'm willing to take. All right, and this is why. Because if Navitas is successful, I believe if I have enough shares and I buy enough and they're successful, I believe this stock will make me a millionaire. Okay? Not overnight, maybe in 10, 15 years or so, but nevertheless, my Navitas position will blow up dramatically. Let's look at the portfolio. You see how I got dramatic gains on Palantir? I invested 10 grand worth of it. I believe that if Navitas's business model plays out with proper execution and a good market, the Navitas stock position will dwarf the Palantir position, and with ease when it comes in. All right. So this is one of those opportunities where you're not going to just get a 10x. I'm looking more at 50x projections, 70x, 100x projections on Navitas if everything goes well. This is an equity that is, high risk, high reward. This is an equity that I'm of the understanding that it's possible it goes to zero, and I'm prepared for that. I'm one of those investors. I'm okay with grabbing my cojones and going in and doing my work. All right. Okay. Now that we got that out of the way, let's talk about profitability. There's a lot of questions on how is this going to be a profitable company. All right. We're looking at 40% gross profit margin, net income margins looking like negative 84%. Their main segment resource, their main revenue sales segment resources, as far as how much sales they're getting at, is due to their laptop and cell phone chips. The cell phone chargers, laptop chargers, that's the majority of their revenue sales right now. And that is a low margin arena. So these different segments, solar microinverter microchips that go into those solar inverters, AI robotics, the AI data centers, those are segments that still need to be launched. The last quarter, we saw several patent design wins. We've seen collaboration with Infineon for the AI robotics piece. So, and there's still several customer pipeline projects that are due to launch in a couple quarters now. Once those pipelines start hitting and Navitas starts realizing revenue off those other segments, margins will expand. When I look at this margin setup, I look at a capitulated margin setup to where there's tailwinds to be had. So when the margins expand, increase in sales multiple will happen. All right. And that will be one of the contributing factors, along with reaccelerated revenue growth, which will push the stock up. We'll go to earnings and their estimates. All right. Analysts don't have them set for profitability until 2027. That's fine. We're about to be done with 2024. If we're a couple years out, that's okay. Analysts got them growing next year for 5.74% on revenue. I think that's a little bit lower than what I'm anticipating. I think they beat that with ease. And meanwhile, with actual revenue growth that is stunted at the lowest level, even seeing a little bit of decrease in revenue, and a pullback in revenue, that's one of the major factors of why the equity is being hit so hard. But it will create easier comps for next year. All right. So in all reality, if analysts are right, all I see is a bigger time frame for me to continue to buy the equity. So I'm anticipating 3 to 6 months that I have to buy the equity before they start raising guidance and those other pipeline revenue contributors start kicking in. All right. So that's my take on Navitas. I wanted to put out another video on it because we're seeing a lot of price action more on the downside. And I'll admit I want to see this because I'm building out more of a position. So the cheaper this thing gets, the more I'm going to be able to acquire more shares and get this cost basis down lower. I'm at $2.61 cost basis, recently lowered from $2.98. The trick of when I'm actually building the position is I actually focus on cost basis and share count. This actual current value, all of this middle portion that you see right here is all temporary and natural. When you see this investor go to work and seeing how the sausage is made, this is how it works. All these other positions that are green, they all pretty much look like that as well. All right. Safer play. I got my eyes on Crocs. I don't plan to buy shares in Crocs until we're in the low 90s, maybe high 80s. Then I'll start positioning more into Crocs and increasing that position. I view Crocs as more of an easy double and triple over the next 5 years, probably a quadruple with the possibility of how things are going with their debt reduction and strong free cash flows. SoFi, I can see SoFi running to $17 by the end of the year. I really can. They got rid of those preferred shares. I'll put another video out on that later. So I think that SoFi is going to start. It's building momentum, and that momentum will continue. All right, I'll put another video out on that. But that's all I got for today. Check out the Patreon, the Looney Syndicate. $5 a month. You can't really beat it. I'm always be with like-minded investors, get better access to me and so forth, and get access to the Hidden Gem collection where I go way more in depth on the actual skills of investing and so forth. With that being said, have a good day and enjoy your weekend.